All right. It was not a delivery. There was something going on. All right, something unexpected. So, anyways, the question here, we left off midway through Brad's answer, and I had suggested that this is a good, useful answer. It's an answer to the question. It fits nicely in the template. It does everything it's supposed to do. And if we're looking at the question instructions here, the question instructions say separate asset class for each account type, okay, using each asset class only once, okay. So that's fine. Now, yeah, I can fix that. I'll change that to 5 asset classes, or I'll figure out some way around that. But anyways, that's US equity gone. And that's how I would approach this. I would say, take one asset class and where does it fit best? Okay, and once I have that, then I can sort of work from there. All right, so then we go to fixed income. All right, so what do we think about fixed income here as a solution? Yeah, I'm not sure, again, what the relevance of pulling steady income is from each of these. I can still pull steady income from an RRSP. I can't directly pull it from RSP or LIRA, but I can certainly convert those to RIF or LIF and then pull income, right? So I don't know that steady income differentiates this answer. Okay. Yeah. Well, again, Chris, we'll go to those alternate answers in a few minutes. We'll just work through the answers that are provided here, just so we can stay in one lane. All right. Okay, that's fine. Yeah. Yeah. So, Richard, does that support this answer? Does that support fixed income here? Or you're going the same way I think Chris is going with that answer? Okay. Okay, so we're looking for those sort of tax relevant answers. That really is the distinction between these four. Now, I know some of you went in a different direction. We'll come back to that in a moment. All right, and then non-registered investments. Okay, so what do we think of the tax answer that Brad's given here? Right, we're going to work through alternates in a few minutes, Belgi. We're just working through this answer. All right, so yeah, I like this answer too. This is the one that makes good sense to me. Canadian equity is where every component of it is going to be tax efficient. If you have to hold something in a non-reg portfolio, that's probably what makes the most sense. Okay, so we'll give that answer. Okay, that's good. All right. So we've eliminated US equity and Canadian equity. If we're using all 5 asset classes, then that leaves, and honestly, for a question where I know a lot of you fought with the template or didn't really fully understand what was being asked, that's not a bad mark. Okay, remember back to my comments from day 1, and I reiterated these last time we were together, that on a question like this, if you're scoring sort of in the 40 to 75% range for this sort of more difficult question where it's, or maybe something that's a little less intuitive, that's not bad. That's going to put you on the path to passing, okay? Right, there is withholding tax in the TFSA and there is not in the RRSP, okay? So this answer is right, and it would not be right in TFSA. Okay, so you're going to get 50% here. which I think is okay. Obviously, you want 100% on every question, but if you can find marks on a template where marks are not obvious or where you're not sure about answers. The other thing that I would comment on here that Brad did well is kept his answers relatively short. Okay, no long rambling answers. And that is a tendency that we sometimes see in cases where people aren't sure about their answer. So sometimes the tendency here is for Brad, he doesn't know if his LIRA answer is right, and he just gives this sort of paragraph long diatribe about this that doesn't actually make his answer any better. So if you're going to be wrong, at least be wrong and don't burn a bunch of time on it. Okay? Yeah, we're going to come to those in a second, Richard. So point form is perfectly fine. Yeah, point form is perfectly fine. All right. Yeah, so yeah, this question has come up a couple times. So when I hold, so we're going to start with non-reg. Okay, I'm just going to take a second here for US equity and non-reg because everything is based on that. So I'm not suggesting this is a right answer. Okay, that's not at all what's happening here. So US equity in non-reg, what's going to happen here is your capital gains are the same, exactly the same as Canadian capital gains. There's going to be no change here. All right, that's good. Unless you have a high turnover account, then things might be a little different, but fundamentally your capital gains are the same as Canadian capital gains. But what's going to happen is there is a 15% mandatory withholding tax on dividend income. Okay. Now, you're right as well, Mike. That's a great point. There is no dividend tax credit or gross up. And that would be the same as foreign equity. Whereas this 15% tax that I talked about here, this is only true for US equity. Okay. Is everybody with me there? Right, so hang on to that comment for a second, Chick. I said we're gonna start here and then we'll work from this, right? So then what happens with that 15% mandatory withholding tax, what happens with that 50% mandatory withholding tax is that you can get that back by filing your US tax return. So when you file that US tax return, then you're going to pay dividend tax on your US dividends, and you're going to get a foreign income tax credit on that withholding tax. So you end up, or sorry, on that tax, so you end up getting your withholding tax back. That's good? Okay, we'll come back to your comment in a second, Kevin. So if it's a Canadian mutual fund, Connor, then you're right, it deals with that internally, exactly that, and divided amongst investors, okay? Okay. Now, if it's a Canadian holding a US mutual fund in a US brokerage account, then you've got a different beast, okay? Okay, so then if I move that into a TFSA, so I do that same thing in a TFSA, now there is no way to recover that 15% withholding tax because you lose your 15%. There's no foreign income tax credit available to offset income in the TFSA. Okay, right, because it's not recognized in our tax treaty, Mike, that's exactly true. Now, Kevin, potentially what you're suggesting is correct here. Yeah, it does. Well, there's no inherent cost, Baljeet, but if you're going to use a tax professional, then yes, there's going to be a cost to that. Which is potentially another reason not to do this, right? Okay, right. So I'm not suggesting that's what you want to do. I already suggested that Canadian equity is the right answer. So yeah, Kevin, your comment might be right if I was only comparing TFSA to non-reg, but I'm not only comparing TFSA to non-reg. I can hold my US stuff in the RRSP here. It's perfectly okay to do so. Is that fair? Okay. So I would suggest that still US equity in your RRSP or in your LIRA for that matter, those are both valid answers. Okay. So then what goes into my TFSA? If we don't like US equity and we at least didn't like the fixed income answer, could fixed income still be a right answer for the TFSA? I think it could. I think it absolutely could. And what I might point to here, although it doesn't show up on my answer key, okay, is that it's the least tax efficient investment. So putting it in this very tax efficient account might be useful. Okay, that's fair. Yeah, could make that same argument with cash, Kevin. It's a fair comment. All right. So what's good in my LIRA then? What should be sitting in my LIRA? What asset classes have I not used yet? Okay, so what would be the advantage of holding? Well, I already have used US equity, right? So what's the advantage of having global equity in my LIRA? How does that help? I don't understand the diversification comment, Shika. What am I diversifying for there? What's the harm in taking risk in my LIRA? What does it matter if I take risk in my LIRA or in my non-reg accounts? Well, that's what I want, Richard. Is there an answer? Is there an answer available? Okay, that's what I'm trying to get at here. Okay, so Yuri, why is that different than TFSA or RRSP? Okay, but again, he needs income no matter what, right? That doesn't change the answer. So there's a couple things that I would point to here. I actually prefer fixed income as an answer here. I think fixed income is your best answer here. And this ties into, well, I can't remember who gave this comment before, but I like fixed income here. And the reason that I like it is because it is the least tax efficient asset on its own right. Okay, it also, you're going to have to hold some here just to get to your account minimums, right? If we've got an $850,000 portfolio, I can't get away without having some fixed income. If that has to represent 40 or 40, whatever it is, percent of my portfolio, I have to have fixed income in this portfolio. So that's not really a tax answer, but it's a true statement. Okay. Okay. Yeah, it's a valid point, Chris, but I don't have to say why it's a bad answer. I just have to say why it's a good answer, right? Okay. Yeah, that's true. So that's maybe, I get your point here, Chris, that if I have equity in my lira, I might see more volatile values, right? Is that fair? Yeah, maybe, Scott, that's a valid point. It creates some stability for my estate. Is that where you're going here? Yeah, I could buy that as well. Okay. So there are some good answers here. I would put fixed income in here. I think fixed income makes the most sense here. I think it's the easiest one to give an answer for. Okay, we've already, I'm not sure, transfer some amounts from where? No, just give one holding, Shauna. Just give one holding. It says just one. So I chose fixed income. That is the answer I'm giving here. All right. You're talking about moving from lira to RRSP, Baljeet? Are you talking about unlocking, or are you talking about literally taking your LIF withdrawals and contributing to your RSP? Yeah, sorry, I'm not following, Baljeet, sorry. Okay, but he's never going to have RSP room again, right? He's using all of his RSP deduction limit to do this transfer. Okay. So that idea of being able to move LIF income into your RRSP, I don't see that that's valid for him. Okay. Okay. So if we're going to have fixed income there, what fits into TFSA? Could be cash. I would honestly put global equity here. Okay. I think there is a potential valid cash answer here, but I would put global equity. And the reason that I would use this is because here there's not that 15% mandatory withholding. So with global equity, the tax answer here is that there's no gross up or credit. So now I'm going to turn inefficient dividends into efficient dividends. Okay. Right, now you have to hold it somewhere, Shika, right? I don't know if inflation changes this answer or not. Yeah, that's exactly it, Chris. That's your answer is the same as mine here, I think. Yeah. Okay. And that's true, Baljeet. You have that very large growth potential. Okay, so largest growth potential here. And then that turns into tax-free withdrawals later. Okay, that's good. Now I can buy cash here too. I'm not honestly generally a big fan of it, but that doesn't make it a wrong answer. Cash might be good in the TFSA because we can make the argument here that that's where you're going to have the most liquidity. There's no consequences to that withdrawal. So yeah, cash can work here as well. And I think that can be true for either TFSA or non-reg because of the potential need for liquidity, and you don't want to be paying tax needlessly on those withdrawals. Yeah, that's why I suggest non-reg here, Chris. Yeah. Okay, and that need for liquidity could be a viable need. Okay, that's good. All right. Are there any answers that came up earlier? I know a bunch of you spat answers out at me earlier. Are there any of the answers that we got earlier that we should be reviewing here? Okay, perfect. Okay, thanks, Brad. That's good. That's a daring answer to show. There's lots that can go wrong with that question. But again, as I said, uh, if I'm sure some of you did get the 100% on this, some of you probably have sort of fought this kind of battle before in real life, done the tax location thing, but not everybody will have done this. Okay, that's good. Yeah, that's a fair point, Kevin. Yeah, you really do have to at least have a passing knowledge of U.S. taxation, but not other not other jurisdictions. Okay. Yeah, that's really the key here, Brad, right? Okay. It's a true story, Chris. It's not so easy to accomplish this, especially in a mutual funds platform. It's a little easier to do in an IROC platform, but not so much in a mutual funds platform. Now, I do see, and this is, I don't know if this is a real life consideration, but a few of the robo advisors will do a sort of cross account tax location strategy. So I know Wealthsimple has that as a sort of selling feature where they'll tax locate your assets. Okay, that's good. Mostly Fatima Chapter 5 of Advanced Curriculum. Okay. I didn't know that, Tracy. All right. Yeah, I think that reinforces my comment here, Kevin, right? It's not, you just get a little more room to maneuver in an IROC compliance platform, right? Okay, so yeah, Chapter 5 of Advanced Curriculum. Okay, there's a little bit in Chapter 9 of Core. All right. Okay. Are we more comfortable now? Does everybody, I know a lot of you at the start said, I don't really understand the template, okay? You're going to have this on the exam. If you've not done this kind of work before, where you've actually had to do a tax located portfolio or whatever it is, it could be an insurance needs analysis, or it could be somebody transferring assets into different types of accounts or whatever it is. But it's really where you have to step in and say, what's the financial planning problem here? Okay. And the financial planning problem is that we're trying to tax locate this portfolio properly. All right, that's good. Okay, yeah, thanks again, Brad, that's really good. All right, how about on to question 2. Now we're getting into some time value of money stuff. Yeah, good stuff, Shika. Just crack open as much of question 2 as you can get on the screen. Will be good here. Yeah, that's good right there. Thank you. Okay, I'm going to do it this way so we have the calculator. So you should see the calculator on the screen. Okay, do we have a calculator on the screen? Is that showing up? Just need a quick yes or no here. Yeah, okay, perfect, thanks. All right, so the overall question. Now, we didn't do this on the first, and I should have done this on the first. So the overall question does tell you how many marks you have. So there's 3 marks here for the overall question, a half mark here. Okay, and it's broken up nicely so that if you sort of mess up the first one, the second one, you can still get your marks for. Okay. Now a whole bunch of this template is filled in for you already. Okay, so how do we start with this kind of question? Let's go there first. How do I start with answering this kind of question? Okay, so how do I start there, Olu? What's the first step I'm going to take to do this? As soon as I see this box, what should I be doing? I'm going to draw my line. All right. And here's what I know on my line. I know, perfect, Brad, right on. I know that we have a 3.9% IY. Oh, do I want begin here, Scott? Yeah, end mode. I want end mode. The question is very clear that I want end mode, isn't it? All right. Let's say here. All right. And what's my payment? Is there any payment happening with this pension? Is there any money going in on a recurring basis? There's nothing. Okay. And in fact, that's established for us on the template. All right. How long is my line in terms of years? 8 years. Okay. What is my future value and or present value? Yeah, it's 840,000 now, right? We know it's 840,000 of present value. That's the value at age 57. Okay. So then I'm trying to solve for future value. That's my unknown here. Okay. Does that work? So I know I've made this suggestion at least once before, but what I would suggest is when you sit down to write your exam, you write out a few of these little draw a line boxes for yourself, and then write out, depends what calculator you're using, but write out a few of your, or how you use the calculator, write out a few of your TVM boxes. No, because the fees have nothing to do with this, Ada. That's not part of this calculation. This is not asking you to calculate the investment return for the financial advisor or anything like that. This is the imputed future value. So this is really saying if he worked here until age 65, or really if he just left the pension untouched until age 65, what is the value then? Okay. All right, look at Kevin with his longhand math here. All right. We're going to use the financial calculator though, Kevin. Okay. Yeah, and the 8 years is very clear, Shika. You know that, right? Okay. All right, so my PY and CY are both going to be 1 times PY is going to be 8. IY, yeah, that's it, Shika, right? That's why I suggest draw your line, slow yourself down, right? I'm a big fan of getting this really as mechanical as it can possibly be. Nice. All right, present value is, yeah, I'll do it negative 840. I agree with that approach here. Payment at 0, and we're going to compute future value. Okay, so we've had quite a few people shoot the answer already here. Right, because there's no taxes here either, Fatima. This is not a tax question, right? All it's asking is what's the difference between the two commuted values. It's not asking if he takes it out or anything like that. It is just giving you the value of the pension, okay? There's nothing here beyond just what's being asked on the surface. And that is normal. Okay, where I find people get themselves into trouble here is where they try to bring in this other information. We've already seen a few examples of that. You're told what you need to be told to answer the question. Okay. Right on. So $1,140,785. Okay. But if you, so honestly, here's what would happen. Okay. Yeah, again, Baljeet, the question isn't asking about what goes into the lira, right? It's not there. So the question doesn't mention taxes. It doesn't mention maximum transfer value. It doesn't mention whatever investment fees, none of that stuff. So you just solve what's in front of you. If the question wants you to bring those other things in, it will be a staged question. You'll have stage 1, do this, stage 2, do this, stage 3, do this. Okay. Right, which is not what the case study says, Shika, right? The case study says that the $840,000 is at retirement, and his retirement is right away in the next few months. Okay. Yeah, that's always the way, right? All right, I totally understand what you flipped around, and I just gave that first couple sentences a quick read here to make sure that it's accurate in the case study, and I think it's accurate in the case study. Okay. Any questions there? Now, what I might add, I don't know, does other people make that same mistake? Did anybody else flip around the numbers like Shika did? If that was a common error, then I would add maybe a little bit to the explanation. Okay. All right. By the way, for those of you that do volunteer to write that QAFP exam, that's what's going to happen, right? If there's a common error people make in that practice, right, they're going to rephrase the questions. All right, I'm not trying to single you out, Shika. Just honestly, it's a legitimate question. Is if there's some confusion with the language in the case study, then we do have to rewrite the case study. You should not be surprised at that, Tracy. You know what you're doing. All right. And I know you've done a fair bit of pension work, which helps with this. Okay. So now can we go on to the second part of question 2? Preferably from somebody who got the one 147.85. Otherwise, it's going to be confusing. Okay, yeah, go ahead, Trevor. That's excellent. Crack her open. And I might get you to share both of your, yeah, that's excellent. Right there is good. Maybe give me one level of zoom if you can. Control plus once. There, that's beautiful, look at that. All right. Oh, you don't. Okay, well, that's all right. We'll just use your first then. Okay, thanks a lot, Jason. We will talk to you the middle of August, 11th or whatever that date is. I don't remember, sorry. Something like that, right? Okay. So this actually is something I talked about earlier. I actually specifically included this question in here because of a new competency that's added in the body of knowledge. And this is what we would refer to as a sensitivity analysis, which is just solving a problem with a range of different inputs. Okay, that's good. So it's really just 3 time value of money calculations. You're given a whole bunch of the information and then just asked, what if David dies at each given age? Okay. This is a fair question. Oh, thanks, Jason, too. I missed that. All right. Okay, yeah, so we're going to just go through. I don't know, do we want to actually do this or how do we do with the math here? So I would draw my line. Okay, and it's honestly not a terribly difficult bit of time value of money. I know I've got $1,140,785 here. If you use the pennies or not, it's not going to matter. Okay, it's not material. You probably get a couple points of cushion left or right. So if you had 2.33 or 2.35, you're probably still okay with a question like this. And then you're going to do 20, 25, and 30 years. You're going to do 59, 58, or 59, 59, whatever per month, and 0 out here, and just solve for 3 different IYs. And again, if you don't sort of needlessly complicate this, should be okay. Now, maybe Sheik, I should have pulled your answer here because this is where we get a little object lesson, because Sheikha solved the first one incorrectly, right? Yeah, that's 650,000 or thereabouts. Sheikha, I don't remember the exact answer, but if you solve that wrong and then you still use that number here, you could get these answers right. So you're gonna make your grader jump through some hoops here. Okay. Right, but that doesn't mean this question is wrong. So if you solved the first part incorrectly and got whatever it was, 650, something like that, right? Okay, and then solved all 3 using the 650, you could still get these marks. So you don't domino effect yourself through the whole question. You don't ruin everything for yourself. You only ruin the question where the marks are provided. You won't be the most popular person with your grader because you're going to make them do a bunch of extra math, but, oh, I see, okay. Yeah, and that would be problematic. I would suggest using the 840 is problematic, although you might still get it. You might still get that mark. I can't say for sure. That makes me think that I should add a couple words to the 840 where I have it up there. All right. Yeah, when I actually do the time value of money, then the 1,140,000 is going to be negative and the payment is going to be positive, right? Because you're using the 1,140,000, at least notionally, to buy that cash flow, right? And in fact, if you did it as a positive, you should have gotten an error answer, right? If you did 1140 or 114,785 as a positive and 5958 as a positive, you should have gotten error 5. Yeah, the future value from the last question, Olu, is the present value here. That's a true story. Okay. And I'll just point out one more thing here. Sometimes students get I don't know, themselves confused when they start to count the years. So don't make this difficult for yourself. Okay. Age 95 minus age 65 is 30 years. Okay, just be simple like that. Okay. Yeah, it was, Richard. Yeah, it was in the first 2 bullet points in the case. And even if not, but it is. Even if not, it's provided in the template. Okay, but yes, it was in the first 2 bullet points, right at the top of the case study. I'm not sure, Baljeet, what's going on there. So again, useful to have built a few of these for yourself. Okay, I know that I'm solving on N mode. PY and CY are both going to be, oh, that's going to be 12. I apologize, 12. CY, I'm going to leave CY 1. Okay. If I did it at 12, it shouldn't make a big difference, but it would make a small difference. So you might be marked right if you use 12 as well. I expect you probably would, just because that's a little more friendly to the HP calculator. Times PY is going to be 20. IY is negative 1140785. Present value, oh, sorry, that's not IY. IY is what we're computing. Present value is negative 1140785. Payment at 5958.67 and future value at 0. Okay, those have been my inputs. Yeah, it is still right, Olu. I understand what you're saying. You're going to be marked right. So yeah, I could have had, and this is really just a matter of sort of understanding what they're doing in the templates. So maybe this should have been, and honestly, Olu, they might do it like this. The N might be just your number of years, or it might be your number of periods. You're not going to get it right or wrong on that basis. Okay. FP Canada recognizes that there are numerous possible conventions for the calculator. So you might have seen, this might be N equals 20 or N equals 240. Both are fine. All right, that's good. Right, but you know the payment is monthly. The template tells you the payment is monthly. There's not any confusion around that. Okay. Yeah, perfect spell sheet. Okay. That's just fine. Not a battle worth fighting. All right. Good. The point here is just solve your time value of money. Don't overcomplicate it. Don't bring information that's not there. Trust the template. The template will help you out. You're just doing 3 time value of money solves here. Okay. Any questions there? Yes, that would be a problem, Kevin. You'd really have to do a bunch of extra math to get it to a yearly payment, wouldn't you? Right? That's materially different, I would suggest. That would be a weird conversion to have made, especially that you're given the payment in the template. Okay, that's good. Any other questions there? All right, there really is some sort of recognition of different time value of money conventions here. Just go through and solve it. If you sort of foundationally understand the question, you'll be okay. All right, do I have a volunteer for the next question? The fill in the blanks investment template question here. Good stuff, Tracy. All right, let's see it here. This is a daring one to volunteer for, isn't it, Tracy? Ample opportunity for mistakes here. And thanks for sharing that one. Sorry, Kevin, was that you? And Trevor, you said you're queued up too, didn't you? I don't remember who shared what now, sorry. Thanks, Trevor. All right. I apologize. Trevor, I couldn't remember who shared what when. Oh, that's good. Just scroll up a tiny bit for me there. Yeah, perfect. Okay, got it. Tracy, thanks very much. Okay, so again, let's thank Trevor for sharing that one, and we'll go on to Tracy's answer. Now, I just want to point out, because Tracy's got a fair bit bolded here, on the actual template, the value was bolded. Oh, that was all pre-filled. Okay, and everything else was sort of up to you. I clearly can't even draw a circle here. Okay, so that was all pre-filled. And again, I want to watch where my marks are. What's the sort of notable thing about marks for this question? Oh, happy birthday, Tracy. If I'd known, I would have baked you a cake. What do you notice about the marks here? Yeah, I would suggest that that's the right way to look at it, Kevin. Okay, it's only one mark. And what's your time here? So both time and possibility for error. Okay, so I don't know if that's quite right, Kevin, but if I was pushed for time, I would honestly probably skip this question. There's no follow-on to this. It's the last question in this question. If I was pushed, I would really and truly skip this question. Okay, if I'm doing well for time, fine, then I'll take the time and answer it. But and there's honestly not even a point in guessing here. You're not going to guess the right answer, and even if you did, well, none of them are Baljeet. So they're all minimum 0 marks, okay? The ones where I have that half point deduction or whatever, still, you can't get less than 0 marks, okay? Now, in this case, all the marks show up right at the tail end here. Okay, so then, with the lira, do we buy the gross return here? 23,985? Yeah, good stuff. That's relatively straightforward. Okay. With the RSP, do we buy the gross return here? Oh, anybody else lose audio? Just let Shika know if you can hear me or not. I show it's still working here. Okay, perfect. So yeah, 42.90. And the last two, 17.55 and 27.30, all good, right? Those are all the correct answers. Okay, now what about fees here? Yeah, so what should have happened here, sorry, Tracy, and this is where this question, it is such a high risk, low reward outcome. What's the difference? I guess, how are fees normally calculated? I'm not sure if I understand fully where what do you mean periods of time? Like you mean 1 year? Oh, I see. That's fair, actually. I don't actually specifically say in here 1 year. I guess, okay. So here's where, right, okay. Here, this is gonna go back to the comment I made earlier. If you were doing 4 time value of money calculations, you would know that you're doing 4 time value of money calculations. There's never going to be a sort of hidden time value of money calculation. Now, it's fair. What I should say is his 1 year return. So the question should say here, 1 year return, and that would be much more fair, right? But just for your own reference, just as a sort of matter of how these questions are structured, if they want you to do 4 TVM calculations, it will be obvious, okay? Now, what would happen on the exam if you really did that? Okay, so let's say that we took the same approach that Trevor and Mal have suggested, and I solved for 8 years out, well, or age 80 or whatever. The grader is going to look at that and say, well, hang on a second here. Does the question actually say that we're trying to solve for a 1 year return? And if the grader doesn't see that in there, they might go back. In fact, they should go back and say, hang on a second, there's an ambiguity in this question. And they would actually probably have to go through and confirm all the math, and potentially you still get your mark. Okay, that's good. Yeah, it would be the same thing, Kamal. If you lost 5%, you're still paying fees on the amount net of that return, right? Okay, at least in this example, right, where it does say fees are assessed at 1% of the amount invested after returns. Okay. Now, it does depend on how your fees are being calculated, because I know some places are going to do the fee based on the average balance at the end of each month, for example. So it can be a little bit more complicated than this. It just depends what the sort of timing of your fee calculation is. It's the kind of thing people generally don't think about until you have a year with a 10% loss or whatever. That's where that starts to be material. So what we should be doing for fees is we should be doing 615 plus the 23,985. I don't see where it says. It just says in after returns. I don't. Okay. I don't see the exact language you're talking about, Baljeet. Sorry. And then yeah, that times 1%, and that's going to give you $6,390. Okay. And the question does say round to the nearest dollar. I really tried to make your life easy by just round to the nearest dollar so that we don't have a bunch of pennies floating around here. Okay, and I think it's clear, round to the nearest dollar. All right, so it's just you missed adding in the gross returns, Tracy. That's going to hurt a little bit. I'll just throw in the answers here so we have them, because I know some of you want to see the full set of answers. So what I would suggest is the correct set of answers here would be 6,390, and then 1143, and then 468, and finally 727. Good stuff. Okay. All right, how about taxes? Tracy, what about taxes on your lira and our? It should be zero, shouldn't it? It should be zero amounts, right? And only the only the non-reg should be taxable. Okay, and it should be for the non-reg tax, should be 2730 minus $727. That's going to give you $2,003, and then times 20%. Oh no, and yeah, there's no, that's terrible. All right, I'm sorry, Tracy. And really, you had to bring that extra information to the question, right? You're now thinking about withdrawals or whatever the case is, but it's not withdrawals. And this, again, the same comment I made earlier about sort of, have you done this before? So I know those of you that went through Capstone did something like this, but or even in core curriculum with me, if you did core curriculum in chapter 11, you did a table very much like this. Okay, so here we're just showing the investment return. We're calculating out the investment return. Okay. Any? So Sunil, what does the question say about taxes? What's the information you're provided with in the question? Right, same question here, Shika. What does that last sentence in the question show you? So it's a valid point, and potentially, I mean, I still should know that my fees, and I just showed this, right? We showed this before the coffee break, or I guess quite early this morning. I showed that fees do reduce your taxable income one way or another, right? Right, that's true, Fatima. No taxes on those zeros. The 727 is from my fees. Okay, so it's 2730 of returns. It's 727 of fees. So that's my net amount, and that's my effective tax rate. Okay. Where's your total taxes higher, Connor? Are you talking about because of the rest of what happens here? Right, okay, but if we're just dealing with this problem, all you want to use is the information that's presented here, which says any taxable returns are taxed at an effective tax rate of 20%. And honestly, for a relatively tax efficient non-reg portfolio, that's about what it should be. Okay, maybe even less than that if you're using all corporate class or something like that. But if you're told effective tax rate is 20%, that's your effective tax rate. Don't make things more complicated than that. And when we talk about an effective tax rate, that includes dividend income, that includes taxable capital gains, that includes deferred capital gains, that includes all of your tax measures. Okay, that's what effective tax rate means. Okay. Fatima, that depends where you're paying your fees. Okay. It doesn't matter if you're fee-based or not. This would be true even if we're just talking about MER, right? Whether I'm talking about an MER or a fee directly charged by the advisor, this is still a true story. You're still paying $727 of fees. They either reduce your return or you get your return and then pay your fees afterwards. It doesn't matter. In either case, they're effectively deducted, like I showed earlier. Okay, bringing your return down, and then you're paying tax on that amount net of your fees. I'm not sure why. What does that change, Fatima? What answer does that change? Why? What? I guess I don't follow that, Fatima. So what are you showing for your non-reg tax? Where I show 401, what are you showing? Okay, only on the non-reg, Fatima? You're not talking about the registered accounts of the TFSA, are you? Okay, but that's not going to be true. Yeah, that's, now, I suppose it is possible that you're paying separate fees there, but that's not normal. There's no account management that I'm aware of where that would be how it works, where you're actually taking money out of your RSP to pay your fees. Even if the investment dealer is doing it that way, and that is actually exactly, I think Kevin asked this question a couple hours ago, that's still allowed. You pay your MER out of your RSP performance. That's not an RSP withdrawal. We're going to do a little bit on trust today, Richard, but maybe not much. I had said that we may not get to them today. That's okay. Yeah. Okay. Yes, typically they are. Baljeet, again, you might have a fee that's based on your average monthly balance or whatever. Okay. There's not only one way to do this. Okay. Depends how much your investment dealer wants to put into it. Your investment dealer could say, whatever, it's a 1% fee, but I'm going to charge 1/12 of that every month based on the balance at the end of the month. Okay, good. All right. So then our net return so this would be $401 here. All right, and our net return in dollars then, it should be, I'll just give the right answers here real quick. So this should be 17,595. This should be 3147. Honestly, the number of questions that have come up here makes me think that I should maybe have given 2 marks for this or allocated marks a little bit more. I thought that this was going to be more straightforward than it was. 1287 and 1602. Okay, for a total of 23,631. All right. Okay, and what is our return net of taxes and fees then? So what's the ultimate return here? That's just going to be 23,631 divided by your original $850,000. Okay, so it's a 2.81%. But yeah, a lot of work for 1 mark for sure. Okay. Oh, come on, Tracy. All right. So hard on yourself. Yeah, I honestly, I do think this is a fair question. I just think maybe I should give 1 more mark. I don't think there's anything in here other than the 1-year thing. The 1-year thing is a good comment. I'll add that in. And like I said, if you're really excited on that exam and it was exactly worded the way I have it worded here, you would really be putting your grader through a bunch of extra work. Okay. Interesting, Mel. All right. Yeah, so I cheated, Mike. I did it in Excel. All right. It does actually, Richard. Yeah, it does. Okay. I don't know if that would actually hurt you, Serena, but it's there for your benefit. Okay. It's really there to make your life easier. So watch those kinds of instructions. They really are there to simplify the answers. Okay. Any other questions here? All right. Yeah, it just makes your life more challenging to do it that way. Good stuff, Michelle. I'm actually curious about that. On that note, and I don't know if I have, yeah, here, I think here. Maybe you can give me, did you get this question? If you tried the question, did you get it right? How did people actually do here? Oh, pretty overwhelming response the wrong way here. For the roughly half of you that answered, about 3/4 did not. Okay, so. Okay, and actually I wanted to ask one other question here while I'm in the middle of polling, is how did we do? I think you'd be okay, Brad. Yeah, I think at 1 point off, you'd be okay. Yeah, I think that would be okay. I meant to ask this question at the beginning. I think I know what the answer is going to be here. Oh, that's surprising. All right. I really do encourage you to start timing yourself. Yeah, there could be that, Baljeet, although I didn't do that here. That would have been pretty vicious, honestly. Okay, so we got quite a few answers in here. I honestly thought it was going to be more than 30 minutes here. So I'm surprised to see so many people in the less than 25-minute range. Okay, I thought this was quite a long question. So, okay. All right, let's keep going. Do I have a volunteer for? Yeah, if you find that it's not an issue, Pamela, it is only for your own sake. I think it's good to have some awareness of how long you take for different kinds of questions so you can build your time management strategy well. Okay, but if you find that you're not pushed for time, yeah, 100% Kevin. And that's pretty typical, right? That was the same with that very first question we had today. Okay, yeah, 100% agreed. Okay, but what I'm trying to do here, Kevin, is put more stuff in your wheelhouse, right? Okay. Do I have a volunteer for question 3? Which is a short question. Yeah, it shouldn't take long to time yourself, Baljeet. It should only, you tell Siri to start timer and you launch into it. Okay. No volunteers for question 3? Is that a true story? All right, well, maybe I'll just bring it up. Seriously, nobody? Okay, I might bring it up. Okay, there we go, Chris. We had Chris stepped up, that's good. Thanks, Tracy, though. And thanks for sharing that answer too, Tracy, that was good. Like I said, that's a high risk, low reward question. Now we'll get Chris's here. Chris, you should be able to share yours now. Good, thanks, Chris, that's helpful. Okay, so now the pension buyback. So first off, are we collection, analysis, or recommendation here? Yeah, this is an analysis question. Perfect. This is exactly an analysis question. Okay. You're not making a recommendation. You're not telling him what to do. Okay. And it's an important question to identify that it is analysis. So good for everybody that pointed that out, because that should be a hint to avoid making a recommendation. You're not telling him what to do. You're just saying, look, here are some things to think about when it comes time to make that recommendation. All right, that's all good? Okay, so what do we think of Chris's first answer here about the rates of return that we calculated? Yeah, honestly, this is completely different from what I envisioned in my answer. Not at all what I considered, but it's a good point, okay? It's a good point that participating in the pension buyback will, well, hang on a second here. It will increase his benefit. Do we know that it'll increase his rate of return? I guess we do. We do know that. That's a fair point, Chris. This could have been bad if you'd gone in a slightly different direction, because what you're not suggesting here is that paying for the pension buyback increases his rate of return, right? So this is good, yeah, versus what I would say paying for the pension buyback, which may decrease his rate of return when you take into account the cost. Do you see, does everybody see my comment there? Chris is not talking about the cost of buying the benefit. He's only talking about the rate of return for participating in the benefit. So this is a true story, okay? All right, if he had said, when you take into account his contributions or his price for the buyback, that would be a different outcome. But this is good, okay? I like this answer. It's not at all what I envisioned, but that's okay, yeah. Okay, and what about RSP deduction limit? PAR is pension adjustment reversal, and actually, this is one of these ones, you're so very close, it's a killer, but I don't actually know if it would cost you the mark, and you're thinking about the right thing here, you're just like a touch off. It's PSPA. PSPA is where you buy back versus PAR, and sorry, PSPA is your past service pension adjustment. Okay, as compared to what you're thinking here, the PAR, pension adjustment reversal, and the pension adjustment reversal is what happens typically when a young person takes their commuted value and gets RSP room restored, because essentially they paid too much into the pension relative to their real cost of the pension. Okay. Yeah, PAR actually gives you room. So PAR gives you room, PSPA reduces your room. So you might actually get your mark here, Chris. I don't know. It depends how picky the grading template is. Okay. All right. I don't think the answer is too long here, Brad. I think it's okay. It's not, he's not rambling on here. Okay. That being said, he could have easily gotten this question right beyond a shadow of a doubt if he had just started at, will reduce his available RSP deduction limit, which will cause a loss of RSP deduction room in future years. Okay. But one thing I want to point out that he did that's really good here, okay, a good step you took here, Chris, is tying this back to the case study, right? So he has contemplated this contractor status, and so you've tied this directly into a fact from the case study, which is a really good habit to get into. But it's not contributed to an RSP, Baljeet. No, I don't like that answer because it's not a contribution to an RSP. Okay. Okay, so this is what we would refer to as a competency-based answer, which I can't type. I can say it, but I can't type it. Competency-based answer, meaning that he pulled this directly from the case study. Does everybody see that? And it's relevant. Okay, that we already know there's going to be that RSP room lost every year. Okay. All right. Good stuff, Chris. Nice. Okay. Okay. Any other questions there? Now, I'll just comment on what I had envisioned here for the first question. What I had in mind was that basically, and in fact, I'll just pull my wording here, sorry, because I had some wording that I was reasonably happy with. Yeah, so his RSP return, I can't remember exactly what it was going to be. Oh, no, we calculated 3.8%. Okay, his RSP, sorry, 2.81%. Okay, and in the pension, he has to live to age 90 to get that return. So basically, that's his break even. So that's what I was thinking with that, but perfectly happy, Chris, you went in that completely different direction. I think it's quite valid. All right, that's good. Okay. Any other questions around this whole mess of a question? Okay, again, I'm happy with this question. There's a couple things that I can tweak now based on some of the feedback here, but so I guess, yeah. But it tests a bunch of different stuff. There's some time value of money in here. There's some conceptual stuff. There's an investment component to it. Okay, I think it's a fair question in the sense of the level of knowledge that you should have coming into your CFP exam. Okay. Don't do this to yourselves. All right. It seems like I'm not a fan, Olu. You've heard this before. I'm not a fan of these mnemonics and rule of thumb. Is it Spellcheat? That might be right. Got one here. And then 4. No, it's definitely more than 4. I see 7 marks, Spellcheat. Question 1 is worth 3. Question 2 is worth 3. And question 3 is worth 1 mark. Okay. All right. Let's go, just while we're here, I'm just going to show you the homework so we all know where to find it, and then we'll start into trusts. Those are the only, what do you have, Devin? Those are the only 2 that I'm aware of. I'm sure there are. I didn't contemplate Chris's creativity here at all. Okay. Yeah, that's a fair comment, Mike. The whole thing, collectively, you're looking for 5 or 6 marks. Unless you do a lot of this kind of work. Okay, if you've done a lot of pension work, if you've done a lot of commuted value work, you should get 7 out of 7 here. I don't know if I can. Sure, let's see here. Yeah, I sure can. All right. Just not with my comments on there, that's all. All right. But yeah, there you go. All right. Okay. Yeah, we're gonna absolutely send you. Same as every time, right? Just like we finished pensions today from last class. Yeah, that's always my plan. All right, yeah. Certainly okay, so just before we go there, I'll show you where the homework is for next class. So we're all perfectly clear here. It's all posted up. Okay, so once you're logged into Moodle, you're gonna go to CFP exam prep. And inside CFP exam prep, you're just gonna scroll down to where it says homework. which is cleverly where I've hidden the homework. Okay, and you click there, and you will see, if you just scroll down a little bit, the homework for day 5. So please complete this homework prior to the August 11th class. Good. Everybody sees that? Okay, and the notes from today will show up just above here. The blank PowerPoints are right there, and then the recordings and screenshots and chat transcripts and so forth will show up right there. Okay, I've really tried to make it clear here. I've got the dates in here. I've got whatever else. It should be, I don't know if easy is the right word, but it should be findable anyways. Okay, that's good. All right, let's go back to trust. Now, are there any other questions before we move on to trusts? Any questions about the homework, about the class schedule, about the case study we just did? Okay, perfect. Right, August 11th is just this group, Sue. Yeah, so you can see that. Again, you have access to the PowerPoint, so you can just scroll up there. I went over this right at the beginning of the day. 11 August is our next day together. I don't know, Sue, why they got flipped around. I don't understand, because I know we're used to doing this at the end of the month and the other in the middle of the month. Yeah, okay. All right, so just to get us sort of rolling here, I want to think about trusts, okay? I don't know what joint servicing means. Do you mean joint and several, Shika? I need what section of the competency profile? Here, we'll pop over there for a second. I'm happy to answer that question before we get into trusts. This is the one I want, right? Yeah, so you want, okay, I don't see joint and several in there. I don't know, I need, oh, this is, hang on a second here. Is this 3.0? Didn't I just pull up 3.0? Oh, I pulled up the wrong version, sorry. I thought I looked. There's so many links to this now. I have it in easy place, but not an easy place from here. It's just killing me. Stop. That's the one I want. Okay, so that's 3.0. Okay, so you want, that's the only reference to joint in here. I need I'm in the competency profile, Shika, but you need to show me what you're thinking of here. Oh, that's not in the competency profile. That's in the standards of professional responsibility. I don't know what you mean by that. That's just a client preference issue, okay? So clients come to you and they say, we're a couple, we share all our financial stuff, we're happy to share information with one another, whatever. That's a joint engagement, okay? But there's no several in there. There's no joint and several. It's either joint or two separate engagements, okay? If it's a couple where they have significant differences in their net worths or incomes, or maybe significant differences in their financial objectives, or if there's sort of a an inherent trust issue around finances, you might separate out those engagements. But you have to work through that with the client, right? There's not sort of one answer to that question. Okay. All right. So a trust. So the idea here, first off, what are we doing with a trust? Well, all I'm doing is separating ownership. I'm creating actually a distinct ownership structure. Okay, the default for ownership is that I have the same, there you go, Oli, right? I have the same person who has beneficial ownership, that is the right to enjoy the use of property, and legal ownership, and that is control over that property. So that's how most property is owned. It shouldn't even need explaining. Okay, so when we talk about ownership, that's what we're doing. We're owning the property and controlling the property. If I own my house, which I actually don't, my wife does. So my wife owns the house that we live in. Okay, everybody's with me here. She enjoys the beneficial use of that house. And also she makes any decisions if we're going to sell the house or take out a mortgage or whatever. Those are her decisions. That's that legal ownership. Okay. Is everybody with me there? Okay. So what we're going to do in a trust is we're going to separate those two things out. So when we talk about a trust, we're going to have a beneficial owner, which we call the beneficiary of the trust or beneficiaries. And then we're going to have the trustee, which is the legal owner or decision maker. Okay, so the question then becomes, why bother? Why would I bother to separate out that form of ownership? Why not just give the property directly to the beneficial owner? Okay, that's good. So this idea, so that's one good reason. Okay, so that's another good reason. Perfect. Michelle and Mike have two potentially good reasons why I might do this. Okay, this idea traces back about 840 years now. We go back to the Fourth Crusades. It might be the Fifth Crusades. I can't remember. And anyways, what we had here, we had these knights in England who owned chunks of land. So they own their little fiefdom, their castle and their lands and their serfs and so forth. And they own all of that. And that knight wants to go off to fight in the Crusades. Perfect, Tracy. That's exactly right. And that knight says, well, I'm going to be gone for years and potentially even decades. You're not getting on a plane and flying off somewhere and then coming back a few months later. You're gone, and often they set up other fiefdoms when they went to fight elsewhere, and they would have these long campaigns and so forth. And it was an uncertain sort of issue about return. So the idea here would be that you wanted somebody to own that property for you while you're gone, but not to take control of that property, not to be able to use it for their own purposes. And this is where we get the development of trust law. And if you read the law of the forest, which is the precursor to the Magna Carta, and then the Magna Carta itself, you will see a lot of reference to this type of activity. So the idea here was exactly as Tracy says, you couldn't give the property to your wife because she wasn't allowed to own property. She, in fact, was property. And you couldn't give it to your kids because your kids were too young to own it, which is Michelle's point. So you would give it to a castellan or a lieutenant, some sort of aide who would take care of it while you're gone. And then when you come back, they give you back that property. That's good. There's some version of that story at the heart of every one of the Robin Hood stories, for example. That's a big part of sort of underlying for Robin Hood. Okay. Yeah, it's true, Kevin. That's 100% true. So in fact, what you're referring to here, Kevin, is something that has a big influence, not just on clients who might have property in France, but if you have clients who have property in any country that follows the French legal tradition, you'll in fact find a lot of those other countries have never adopted trust law. So because it's a relatively new thing to France. No, we do have them in Quebec, Mike, because Quebec uses this sort of hybridized civil, it's a good question though, Mike, yeah. Quebec uses this hybridized civil code and common law. And so they do have trust structures in Quebec, but in other parts of the world, a good chunk of West Africa that was colonized by France, for example, no trust structures. A good chunk of the Middle East that was colonized by France, no trust structures, okay? Or where those first, well, there was some abuses happening there, Tracy, right? We can talk about that a little bit later on, but there were some fairly, I don't know, egregious abuses. We'll maybe talk about that when we talk about taxation of trusts. It's a fairly complicated answer, but yeah, so anyways, the idea here, Olu sums up exactly what I always say about folks who do this, and I stole this from Larry Wood at University of Calgary, but the idea here is trust means no trust. That is, I'm using a trust because there's somebody I don't trust. So that's what we should always be thinking about with any trust structure. Okay, who do I not trust? Or who can I not trust? So we heard a few great examples already. Could be that we have minors. So I want a minor to own property. Minors cannot own many kinds of property. Okay, there is that, Mike, but we'll leave him out of this. All right, I don't even know if I can use his word or his name on the page with the word trust on it, Mike. All right, so the we heard about maybe a spendthrift, somebody who makes poor financial decisions. Maybe I have somebody who lacks legal capacity, okay, such as a child with a serious disability. We're done in about 10 minutes, Richard. Okay. Always the same schedule, always 4 hours from the 9 a.m. Mountain Time start. Okay. We might use this. Yeah, so that's true, Connor. I don't know yet who I want to transfer property to. Okay. Yeah, that's true. We often see this with second marriage issues. That's a perfect example, Olu. Yeah, it might be, Tracy, that I don't trust my kids' spouses. Okay, perfect, which ties into the blended family thing that Chris brings up as well. So Mike, with an alter ego trust, I don't trust a future version of myself. That's when we use the alter ego trust. Perfect, yeah. Okay. Yeah, Sunil, that the kid involved in the business often ties into the idea that I don't know yet who I want to transfer property to. Okay. So I'm going to leave any tax benefits out of this, Kevin. You can, any tax benefits you can get from using a trust, you can get without a trust. Okay. I don't want to get into that just yet, Devin. We'll talk about those legal concepts next time we're together. Okay. Generally speaking, though, just in general, we don't get benefits of a trust if it's a revocable trust. So a revocable trust is a trust in which the settlor, the person who sets up the trust, can take the property back later on. That is usually not really a trust. Okay. That's good. Do we buy that we're using a trust? So the point here, just to pick up on Kevin's comment here, is that there are almost no, I won't say no, but there are almost no explicit tax benefits to using a trust. Okay, there are two exceptions to that. They can be, Tracy, but that's not a terribly beneficial trust. That kind of trust, what you're referring to, is called a bear trust, like B-A-R-E, not like a bear trust. And the bear trust can be used in some jurisdictions for, I'll say avoiding, I don't know if that's the right word or not, but avoiding land transfer tax. That's one place where you see that done. Or sometimes under an even more questionable arrangement to avoid obligations at the end of a marriage breakdown. Okay, all right. Sound effects and everything today, Mike. All right, so yeah, well, it's a tax benefit, Olu. I don't know, you'll not get agreement from me that it's a good tax benefit, but it's a tax benefit. So yeah. Okay, generally speaking, you can accomplish any tax outcome available through a trust without a trust. Yeah, we're done, Shauna, thanks. Yeah, we're wrapping up in about 15 seconds here. All right, thanks for joining us. And all right, good, that's a good place to break. The assignment has trust in it. If you want to review trust before you do the assignment, you can use chapter 6 of advanced curriculum. That's most of the trust stuff. There's a small amount in chapter 6 of core, and then again in chapter 15 of core. Okay, but most of it is in chapter 6 of advanced curriculum. All right. Okay, so when we're on again in a couple weeks' time, on the 11th, I guess, right? We will go through trusts in more detail. We're absolutely not done with trusts. We'll do the practice question dealing with trusts, and time permitting, we will push on to, I don't even know what the other topic was, but whatever my other standby topic is. Yeah, thanks everybody. Lots of good questions today. Appreciate everybody. Lots of sharing of exam answers, even people willing to share where they weren't confident in their answers, which is really nice. Okay. So it's only Wednesday, Mike. We can't be thinking about the weekend already, can we? It is only Wednesday, isn't it? I'm not mistaken. All right. I like it though, Mike. I like it. All right. It's true, Brad. Yeah. Nice. Okay. Get some warm weather like we have in Edmonton. Enjoy it. Yeah. Okay. Thanks, Vishali. Appreciate it. Yeah, I don't know what's going there, you fan. Hopefully it's all good. It doesn't bother me too much. It's I know one of those things that happens. Okay, maybe, yeah, so I did talk about that, Shika. Maybe you can reserve that question until next class. Shika, maybe you can come with a little more refined question and we can look at that. Yeah, I'm gonna post up the solutions, although I haven't been doing that, but I'm gonna post up the solutions. So, yeah. Okay. All right, perfect. Yeah, thanks everybody. I'm gonna wrap up then and we'll talk to you all soon. Thanks.